Hello, traders. Nice to see you. Just the beginning of a new week. It's the last week of March. It might be interesting what's gonna happen on the Friday, especially because we know that last Fridays of the month are usually uh, different to the whole week. But okay, we have 5 days to Friday. And today is Monday, and I would like to invite you to a scalping session. As you know, XM provides live sessions in two rooms, in beginner's room and advanced room. So from early morning to afternoon, you can follow different experts, different strategies, different ideas. Uh, I have on Monday one session, and this session is always devoted to scalping. I have two scalping strategies. One is this, which I'll show you here. The second is based on range bars. The range bars strategy is maybe a bit more technical, more difficult, especially at the beginning. But this strategy, which I'll show you today, is a very simple one. So oh, hello, I see already Mr. Danushka is here. Nice to see you. As I know, this session is also transmitted to YouTube. So, hello to YouTube viewers, and hello to our viewers in Beginners Room on the XM site. You know that scalping is one of the most popular techniques, trading techniques. Why? Because especially for the beginners, it looks very simple, and it looks that you can open and close a trade very quickly, earning some pips, some money, and it seems so easy that many traders begin from scalping before they get some kind of knowledge how the forex works. I must say that after many years of trading, I found scalping is one of the most difficult techniques of trading techniques. Why? Because you need to control your emotions. You need to know what you can expect, and you need to be very precise when you are entering a trade. Because if you plan to take 10 pips and your stop loss is also about 10 pips, any mistake will make your account burn. So, but I found a method to make the scalping a bit more, let's say, a bit easier than the other techniques I found. So let's go to the details of the strategy. Hello, Mr. Robert. Nice to see you also. And first thing is maybe a few words about me, because not all of you know me. I'm trading from 2010 on Forex market, but before I was trading stocks, and at the moment I found that Forex is a bit easier. Forex, you mustn't spend hours and hours reading all the papers and all the news about the companies you want to trade. So I think Forex is a bit easier, but still it's not so easy. Some people say that forex is the money on the forex, the hardest way to get it in easy way. There's a saying, but it's true. It looks simple, but it's not always so. So the strategy I'm explaining is the first red, and all the other strategies you can also get to know when you attend to my other sessions. I have every day some sessions, and on each session I provide some information about the other strategies. Um, what means scalping? Scalping means that you trade, for an example, a currency pair or commodity, any kind of chart of any kind of instrument, but only in a brief. You keep it for a brief time, and often you execute many trades per day. Of course, we don't try to get any huge amounts of pips, but you make it many times, so you can have at the end some significant amounts of money or of pips. Of course, if you use a leverage, and you can also manipulate with this size of the position. Uh, what we need to trade in line with the first red strategy, we need a chart, we need MACD, Also good to have an indicator which is showing supply and demand zones. If you need this, if you find this indicator interesting, how I'm using it, you may also download it from me, from my channel. And double column ACD is also something which is available on the channel, but Bollinger Bands you already have in your platform. Most platforms have Bollinger Bands. I believe that every trading platform will have Bollinger Bands as an indicator in the list of indicators. But if you don't want, you can use only those things. So you need a chart and a double column ACD. Why? Because the strategy is based on price action combined with MACD. So first thing, you follow the price action, how the price is moving, and then you go and check what's happening on the MACD. Because MACD is an integral part of the strategy. I must say that it's probably the fundamental part of the strategy. I need to say a few words about MACD. I know that some of you viewers already know everything about MACD because I showed it many times, but today is a special session. We are also transmitting it to our viewers on the YouTube. So I need to say a few words about the MACD. It's one of my MACD strategies. I have few others, but this one is a scalping strategy. What is MACD? MACD is an indicator which was invented or constructed by analyst Mr. Gerard Appel. It's a very old indicator. It was invented over 40 years ago, but it doesn't matter the age. What matters is how it's working and how it's constructed. And its construction is very simple. MACD is showing us the distance between two moving averages. So if you have a chart like this, uh, and we have two moving averages, one is an exponential moving average 12, the second one is exponential moving 26 periods. The distance between those two moving averages is this, what is the value of MACD. So the value here, this is the MACD. This is what you see at the bottom, this colorful caterpillar. And the distance between two moving averages, this is, so it's absolutely nothing sophisticated. We can say that well, how can this help us in our trading? Well, it can. I'll show you that it can. And I'll give you a proof of this, that it will work. Because after the short theoretical introduction, we'll go to market, we'll go to charts, and we'll try to find on charts those things which I'm speaking about. As I mentioned, scalping is based on 5-minute charts. So generally speaking, this is the main chart I'm observing when I'm scalping. But of course, before I go to 5-minute charts, I usually make a short analysis on a high time frame to try to find the direction, because what everyone knows, trend is your friend. So if you are able to find a trend on a high time frame, you will know that when you are scalping, you are scalping in the direction of the trend. Okay, but not always we can find a trend. So when there's no trend, we are trying to catch the lows and the highs to scalp. And MACD is the one of the instrument which will help us. But coming back for a moment to the theory, I see also Mr. Lindsay is here. Hello, nice to see you guys. A nice beginning of the week, so many viewers. Um, what is the idea, how the MACD, why my MACD is changing the colors and the original not? Because the original MACD, when you add it to your platform, from your platform to your chart, it looks like this. No change in the color, it's just falling or growing, and you have a red line on it. This is a signal line, and this is the MACD itself. So if someone asks you what is the value of MACD for let's say for this candle, the value is this one. This is the value. Okay, so you can find the values. Here are the values shown actual for each candle at that moment, and those values as you see, they are lower and lower, then they grow. And I found that those moments when when MACD is turning around are interesting because it often signals a change on the price action. And originally, when this MACD was projected, was invented, the role of this red line was that if this red line was crossing the MACD and getting out of the histogram, because this is the histogram, those blue lines, blue bars, then it's a signal to buy, and this is a signal to sell. But I found that those signals are very late. For an example, look at this. This is the moment when they broke out. So this was my signal candle to buy. But I found that when we plan to enter, when the MACD is just changing the direction, I would have a signal here. So for a scalper, it's very important to have the signal as soon as possible. That's why I started using this double column MACD. So when you look at the original MACD and the one I'm using, it's nearly the same. The only difference is that it's changing the colors when it's starts to fall. Okay, so as long as it's growing, it's green, and then it becomes red. Those are for me the moments those moments are for me interesting because they can signal a coming good setup. Oh, Mr. Paplin is also here. Well, a lot of people today. So as you see, the values are the same. The only difference is that it's changing the color. And I don't use this line. This is a, line which originally is on the uh, original MACD, but on my I'm not using. Why? Because I changed the values. It's very important to remember that the values for MACD should be like this. The original MACD will have, instead of 1, will have 9. But if you want to use the double column ACD for MetaTrader 4, okay, those are settings for MetaTrader 4. You need to remember about that. You should have like this because if you download from here this indicator, this double color MACD, you'll have a bit different values because you'll have here 5, 35, and 5. And those are not proper. The proper are here. So remember, after adding MACD to your platform, change the values like this. Starting from here, everything is true, but below is false. Why? Because those are alerts. And those alerts, in my opinion, are annoying. Those alerts are disturbing us. If you have one chart, okay, the alert might be good. But if you have 6 charts at once, and each chart will give you some alerts, you'll get lost in those alerts. So I would advise you to disable all those alerts here. Good. So it's all what I wanted to say about the MACD. Now let's go to our charts and maybe why I am using MACD. What MACD is giving me? Well, MACD is showing me two things. First thing is that MACD might show you a divergence. And also the moment when it's changing the direction is also one of the moments which might be interesting. And for an example, if we speak about divergences, divergence is always when price is moving in a different direction than the indicator. And it doesn't matter, is it MACD or is it RSI or stochastic? I don't know what type of indicator you would like to use, but always when there's a divergence, which means that they are moving in opposite direction at the same time, it means there is a divergence. And this is a typical picture which I'm showing very often, that a divergence starts when MACD is creating a low, sorry, a high, but it's lower than the one before here. So for an example, if this is a high and this is a lower high, in the same time, price is creating high and higher high. then we can say that there's a divergence. They are moving in opposite direction. MACD is getting lower and lower, price is getting higher and higher. This is a sign that a divergence might happen. And when such a divergence happens,